Hello everybody. So this video is entitled Post-Crash Rotation. It is a rotation. A lot of the stocks that were down between 7 and 10% yesterday are up. At least an hour ago, they were up between 5 and 10% depending on the stock. Stocks like Celsius, stocks like Zeta, stocks like HIMS, even Tesla up 3% at one point. So lots of stocks that were sold off really hard yesterday are bouncing back a lot today. Not all stocks, but a crypto is bouncing back, and that's Solana. Solana up 9% today. Of course, I have quite a bit of exposure to Solana. As you know, I've made a few videos on Solana treasury companies. I like Solana. We'll talk about Solana in a second. There's some news going on with X and X Money and Solana. But before that, I want to say that I find the movements in the market totally random right now. Yes, the indices are not moving much today. Slightly up, we opened down, we're slightly up on the indices. They're not moving much, yet the macro is very good. The macro is very good. Oil is at $68 right now. We are $6 more expensive than what we were before the start of the Middle East crisis. This means that the inflation readings that have been very high lately, they won't be so high as long as the price of oil stays around the 68 mark, or even the 70, or even the 75 mark. Stay at that level for like the summer, and if you do that, we will have good inflation readings in September for the Fed meeting, and that at least moves away any fear of a rate hike, and actually it could lead to a rate cut. If you look at the impact of this $68 oil, if you look at the impact on the 10-year, wow, 4.3. So we keep dropping another 0.5% down on the 10-year today. This is getting very good. This is very optimistic. If you look at the CME, the odds of a rate hike, for the next meeting late July, these odds are dropping. They're dropping, and of course the rate hike odds for September are those to look at, but those for September are also dropping, and of course they are dropping as oil drops, as the 10-year Treasury yield drops. Of course, the odds of a rate cut drop. That's a really good news for risk assets, for all of the assets that I cover on the channel. This is a very good news, and this is not reflected in asset prices of all sorts, because the market has turned into a casino. It's now a rotation market. It's a market of chasers. People chase. People were selling off HIMS all day yesterday to buy Micron. But next thing you know, of course, a stock like Micron, for example, is way down today, down 5%. All of this rotation is really manic depressive Mr. Market, but nothing like Ben Graham would have known in his day. I'm talking about worse than Ben Graham would have known in his day. Mr. Market is love you on a Thursday, love you not on a Friday, and that's of course the story of memory stocks right now. But you can look at any stock, like look at Microsoft, for example. Microsoft, you're down 6% yesterday, and we pretty much gained it all back today. Microsoft, a huge company, and a top 3 biggest company in the world, down 6%, up 6%. That's the story of so many growth stocks. I told you my screenshot is old now, but Tesla at 3% as I record this. It's complete nonsense. It's just the market rotating from stock to stock, and of course the market has always done that, but not 6% on a $3 trillion asset, not 7% on a $3 trillion asset. It's just nuts. It's in casino mode, as I said in my video yesterday. Another illustration of that, of course, on this channel, I cover smaller companies. I cover companies that have, potential to be multi-baggers. HIMS at 35 is a 7-bagger for me at this point. But to tell you the madness, so HIMS, from the start of the week to yesterday, we're down 13%. And today we're getting it all back. I guess in a matter of 2 days we gained it all back, because we gained it back in after hours yesterday night, and then today we're up another 5%. So yeah, in 2 days we gain it all back. In 3 days we lose it all. Minus 12%, plus 12% in a single week for a stock which, by the way, still has no business trading at 35. Right? HIMS is about 40% from its high last year. Last year, this company was not nearly in the same position of strength as it is today. Last year, this company had legal risk. Last year, this company had no relationship with Lilly and was not selling Lilly's products. Last year, this company was in a gray area on compounding. Last year, this company didn't have the peptides that are coming, and this company is still 45% less than what it was last year. I've been studying a few stocks lately. I'm refocusing on the Patreon, trying to make more exclusive video. Was listening to the Circle CEO, Circle, CRCL, the issuer of USDC. One of the questions in the press conference was your stock is down 70%. Why is your stock down 70%? The CEO mentioned, rightly so, that so many stocks are down still 70% from November of 2025. So many small caps are down 70%. Go look at them. I don't know, off of the top of my mind, a Klarna, for example, is way down. Reax is way down. So many of these higher growth stocks are still down 50 to 70%. So HIMS is rallying a little bit, but HIMS at one point from the peak was down something like 80%. This stock in February of this year dropped to 15. So it's nearly a free bagger from February of this year. The volatility is insane. For a company which, frankly, is the telehealth leader, they have about half of the market share in the US, and they're firing on all cylinders, and they're still cheap, trading at a 0.13. And you're talking about a business that is so cheap. Why? Because I guess it's not in AI, and the market only has eyes for AI right now. But HIMS is a full GLP-1 stack provider. They offer the entire array of GLP-1s. They are now a global company. They acquired a global player. They acquired a few global players, but the last one they acquired a big global player operating in Australia, Japan, Germany, the UK. They now do labs. They do hormone replacement therapy. That's testosterone. They do SSRI. That's anxiety drugs. Blockbuster. They do ED, right? ED drugs. They're a purveyor of blockbuster drugs for mild issues, small health issues, fulfilled online, for a price that is cheaper than copays. They don't accept insurance. You see a doc in 24 hours. It's a subscription business, and they're selling all sorts of blockbuster drugs, and they're half of the market, and they're disrupting mom and pop doctor offices, right? Because who's gonna go see? Most people with mild issues are not gonna go see the doctor, and they're disrupting physical pharmacies. So physical pharmacies, doctor disruptor, subscription business. Inexpensive product, recession-resistant product, blockbuster drug. Peptides are coming as the next catalyst. GLP-1 is a catalyst that is just getting started. And they're incorporating AI, hiring in the field of AI, having AI recommender system for their platform of nearly 2,000 doctors and nurse practitioners, right? They're having AI-designed custom compounded medication to avoid side effects. You custom compound a product. AI. This is the next story of HIMS. But of course, the market is entirely ignoring it. There's a lot of companies and assets out there that would greatly benefit from a fully AI world that the market is entirely ignoring. The market, by the way, is also ignoring AI. The market is ignoring NVIDIA, right? Arguably, the market is ignoring ServiceNow. Agentic AI is going to be a huge thing. ServiceNow technically is like best positioned to benefit from agentic AI. The market is ignoring ServiceNow. The market only has eyes for memory right now, and I'm guessing maybe 2 months from now they'll find another bottleneck, and the market will only have eyes for photonics, for example. That's a word that I see thrown around a lot. Photonics, going away from copper wiring and going into fiber optics and all that sort of stuff. So So, the market just moves to the brand new shiny thing, and it's ignoring companies that could greatly benefit from AI. It's ignoring assets that could greatly benefit from AI. And this is the time to speak about Bitcoin and the time to speak about strategy a little bit. Saylor and Fong Li speaking today. I'll get to that in a second. But yeah, Bitcoin is not doing well. Surprising to see Bitcoin decoupled from say a company like Solana. Of course, Bitcoin is like 50% of all of the crypto market. Solana is like 2 or 3%. So that could explain some of that. But Bitcoin is at 60,000. It's extremely disappointing. And why is MSTR? Why is strategy not doing well? Strategy is not doing well because Bitcoin is not doing well. That was always the deal. If Bitcoin fails, strategy will fail. There's no doubt about that. If Bitcoin fails, strategy will fail. Do I think Bitcoin will fail? No, I don't think Bitcoin will fail. But I also have no idea if Bitcoin is going to be $1 million in 2040 or 2035 or 2045. I have no idea. And I think I'm humble enough to tell you that I have no idea. Now, a lot of chartists, right, look at the chart and say, oh, it keeps bouncing on the $58,000, $59,000 range. It's a good sign. It keeps bouncing. That's what they say. Apparently, it did it 4 times in intraday. And they say, oh, we have support. But then again, what do analysts know, right? Everybody was so certain we'd go to 180 in December of 2025. So what do analysts know? We don't know. We don't know. This low liquidity regime, however, is hurting Bitcoin. People are withdrawing from Bitcoin, and they're hunting the shiny new thing. They're going after SpaceX, which sucked out $80 billion of liquidity from the market. They're going after Micron, which did a 6 or 7x in no time. Google is issuing some debt. Google is soaking up some liquidity, soaking in some liquidity to expand AI. So the liquidity, there's so many opportunities for liquidity to stick to. And it's not sticking to Bitcoin, perhaps because Bitcoin is not the shiny new thing. Bitcoin has been around for a while now. It's a steady Eddie now. It's not the shiny new thing. So before I briefly talk about strategy and my view here, let me recommend an interview. I do that sometimes on this channel. I consume a lot of YouTube content, actually. I wanted to recommend my viewers this Lawrence Lepard interview from Bitcoin. Fed's plan to break the dollar. Feel free to look that up. I could not agree more with Lepard right here. Saylor has been such a net positive for Bitcoin. Yes, he may have made a few mistakes, but think about how many people have been orange-pilled by Michael Saylor and bought Bitcoin because of Michael Saylor in the past 6 years. Not to mention that he will have... Saylor's responsible for Bitcoin being so high. Without Saylor, we'd be lower. At least that's my view. That's my take. Without him, we'd be lower than where we are right now. But that's not even taking into account the actual impact that he's had. I always go back to the Robert Breedlove What is Money interview of 2020. A masterclass in economics. Of course, a masterclass in Austrian economics. In money, the history of money, but also a masterclass in history, like when in doubt. And he pointed out, of course, his Atlas Society interview, which is a short speech, 20 minutes. If you really want to grow your conviction, I would recommend the Robert Breedlove What is Money interview. 20 hours. It's stunning. It's stunning. The depth of understanding of Saylor of this market. But unfortunately, X is so toxic, as highlighted by Andrew Carpathy and acknowledged by Elon Musk. X is very toxic. It's feeling more and more like Reddit, and it's very, very unfortunate. People have very short attention span, and I guess 140 characters is not helping. Stunning takes on this. Of course, he talks about a bunch of stuff, including the Fed. Stunning take. So I agree with him. I mean, he was kind of hawkish on the call, but according to him, he had no choice, right? And I tend to agree. He had no choice. But one of his 5 task force that Kevin Warsh announced was to redefine inflation. And inflation, of course, is at a free handle right now. That's not good. But he said two things. He said he'd be okay with inflation with a 2 handle. So that means if you have 2.99% inflation, he's okay with it. And then the other key to that quote-unquote task force is that maybe he can come back in a few months and say, okay, we've been measuring inflation all wrong. This is the new inflation number. And that new inflation number could magically be, 280 or 299%, and then they'd be okay to cut. Very interesting theory, very interesting take. Of course, I had heard they only care about the handle. Yeah, I heard him say that, but the reason why I wasn't too fond of him saying that, and I called him a hawk, is because we were close to a 4 handle, not a 2 handle. We haven't been in a 2 handle since the Middle East issue. So, anyways, and this goes in line with what I was saying here about the macro. There's a lot of macro goodness going on, so things may not be as dire as they seem. Now, let me focus on Saylor and Fongli, and of course, I will do a dedicated strategy video on Sunday, like I always do, and on Monday, because that's when we have new information. We don't have new information on strategy. Why am I going to make a fully MSTR video? We don't have new information. Bitcoin's bad, and therefore strategy's worse. That's the information. Strategy is not doing well because Bitcoin is not doing well. But anyways, Saylor tweeting this. Volatility tests every capital structure. Strategy remains focused on Bitcoin and disciplined capital allocation, credit quality, and long-term value creation. We appreciate our investors and continue to execute with transparency and resolve. That's true. He doesn't have to tell us weekly what it does. He could do it quarterly, right? There's even some push at the SEC to move to twice a year reporting. Like in real time, every 30 seconds, the information is updated at strategy. He doesn't have to do that. It's a very transparent system. And Fongli, the CEO, noting that global market and sector are experiencing unprecedented volatility. This is what I've been saying since since October 10 of this year. I've been saying that. We've had insane volatility, right? And in my video yesterday, I highlighted that the recent crash of strategy is actually less than the HIMS big crash in February of this year. HIMS moved from like $40 to $15 in, was it 3 weeks? So the strategy's quote-unquote big crash was actually less than HIMS. So really, my channel is not for the faint of heart. If you don't like volatility, this is not the channel for you. This is a very, very volatility channel, volatility-oriented channel. I want to point out two things. One of them is, that's it, extreme fear, of course. We're back in it in crypto. Extreme fear has spread to stock. It is the talk of the town. You go on X, everybody is talking about extreme fear. We are officially in extreme fear all over. And I want to talk about this post I made on Patreon. I guess I'm sharing a sneak peek with YouTube. But, that's it. I made the move on the credit instruments, stretch and stride. I made a move on those, but I'm especially interested in stride because there's a few things to say about stride. Stride right now pays 20% nominal, like 20% tax deferred is roughly the yield that you get on stride right now. That's higher than the Nasdaq. And there's a key difference with the Nasdaq is that the Nasdaq, if you sell it this year, you're going to pay tax this year. Stride is tax deferred. The yield is tax deferred until your cost basis gets to zero, at least if you're in the US. So depending on your tax bracket, this is very interesting. For a New Yorker, this could be close to 30% a yield, which is absolutely insane. Of course, not financial advice. Bitcoin has to work. If Bitcoin doesn't work, if Bitcoin crashes, if Bitcoin fails, these instruments will fail. That's the caveat. These instruments will fail if Bitcoin fails. I could not be more clear. But what if Bitcoin doesn't fail? Well, if Bitcoin doesn't fail, this stride instrument is particularly interesting to me. It was never meant to trade at $52. This one is way off what it IPO'd at. It was never meant to trade at $52. And of course, that's the junior preferred. So that means that strategy could potentially skip a payment. But the question is, will they do that given that it's only 1.4 billion of notional value issued, right? And they've reduced the ATM on this. So my guess is that STRD, they're never going to issue it again. My guess is that it's just going to be a sleeper for strategy, and skipping paying the dividend on STRD would not really help them much, because the amount of money paid out in STRD is nothing like that paid out to Stretch. Nothing like that paid out to Stretch, and therefore I don't think they're gonna cut the junior, because it's so small, right? If the junior was like $5 billion or $10 billion, the risk of the board skipping the dividend would be much higher. But it's not. It's 1.4 billion. So I like STRD right now. But then again, what do I know? Like what do I know? I mean, my stocks. Look at what happened to HIMS. HIMS dropped from 68 to 15, 68 to 15 in 8 months, right? So people look at the when strategy was at 400, and now they look at the strategy price and they're like, okay, well, this is bad. Well, it was worse for HIMS. It was worse for HIMS, and I've had other volatile stocks on this channel. This is the nature of extremely, extremely volatile stocks. And yes, the credit instruments have been less volatile. So anyways, hopefully this gives you my take. If Bitcoin fails, strategy will fail, Stretch will fail. That's just the way it is. Anyways, moving on to Solana. It's a huge day for Solana. Maybe it's a sad day for ETH. As you know, I like Marty Party. I follow his stuff. And that's not just him who highlighted that. A lot of people highlighted that too. But there's a big deal here. It seems like X Money is launching on Solana. It seems like the transactions on X Money are running under the hood on Solana. And Solana is pumping on this, depending on the hours that you use. It's 9% or 7%. It's pumping on this. It's greatly outperforming Bitcoin on the fact that X, right, SpaceX social network, I guess we're going to have to go, because it belongs to SpaceX now, ended up choosing Solana. That's a major validation from a mainstream company here. Major validation from Twitter, right? Using Solana, and we know Facebook built some stuff on Solana too. Solana is seeing tremendous adoption. Now this still has to be reflected in the price of Solana. But if you look at the Solana improvement proposals, there's 2 or 3 improvement proposals that could pass within the next few months. And if they pass, that would change the incentive structure, and it would increase the buybacks on Solana. So Solana buys back 50% of its token, the fees. 50% of the fees go to buyback of the token. The problem is that a lot of the fees are at the app level on Solana, and a lot of the fees are not at the Solana level. We're trying to shift that so that some of the fees come back to the Solana layer. Anyways, I think Solana is way too cheap when it's clear that they are a leading blockchain. As you know, on this channel, let me tell you what I like. I like Bitcoin. I think Bitcoin's the best. I think Bitcoin's money. I think nothing is going to replace Bitcoin for money. That being said, the computer of the world's computer, what is it going to be? I think it very likely could be Solana. If you look at the stat, I think Solana is cheap, and ETH is losing momentum compared to Solana. And as you know, I also like a specialized blockchain called Hyperliquid. I really like Hyperliquid a lot, because Hyperliquid buys back 99% of its token, and the fees at Hyperliquid are actually done on the layer 1. So I like Hyperliquid. Hyperliquid has been doing very well. I'm very happy to see Solana doing very well right now, because as I said, to me there's more than Bitcoin, and there's a little bit of Solana here, and so I love to see that they did that transaction on Solana. So it's a very big deal. I think it will take time for us to assess what this fully means for the network, but it's a pretty big deal, and very happy to see some innovation on there. So anyways, lots of stuff in today's video. Hopefully, I was able to give you my thoughts on a few things. This was not investment advice. This is not financial advice. This is only entertainment. I'm hoping you were entertained. Please like, please subscribe, follow me on Patreon, follow me on X. Thank you for watching, and have a wonderful, wonderful day.